Hello, and welcome to another episode of the Business and Experts Forum. For those who are joining us for the very first time, Business and Experts Forum is a platform for developing people and businesses through knowledge sharing. And what we do on this program is simply highlight the progress and achievement made by people willing to go the extra mile to improve their lifestyles and the lifestyles of those around them, especially their families. The forum features experts and specialists in their respective fields coming to share knowledge on everyday topical issues such as technology, finance, medicine, engineering, entertainment, social media, and the law, just to name a few. So, if you are someone who wants to go into business or you want to improve your business processes or gain knowledge, or if you want to develop your passion, talent, or hobby into a business venture, then this forum is for you. We're live every 2 weeks on Mondays at 7 p.m. GMT, and it's 2 p.m. Eastern Time if you are joining us from the USA. And please remember to subscribe to the channel and also click on the bell to receive notifications every time we publish an episode. Okay, so tonight we are going to be talking about the importance of protecting yourself and your immediate family financially against the unexpected and putting in place a firm financial security that takes the pressure of your immediate family in the event the inevitable happens. We do hear of immense hardship faced by families mourning the loss of a loved one. Families have had to combine the pain of the loss with financial pressures associated with such loss when there is a clear solution to overcoming that challenge. Unfortunately, not everyone knows the relevance of securing your family, and in some cases, people have the knowledge, but they are skeptical or unfamiliar with the process. So today we'll try and unravel some of the misconceptions and processes associated with securing and protecting yourselves and that of your family. And to help us to do that is a very, very important lady, Anike Adelikan, or Nike for short. Nikki worked for the Crown Prosecution Service for 22 years and is now retired from the CPS. She has um, she has a passion for supporting families around the UK with financial education on life insurance cover, working as a specialist protection advisor. Ladies and gentlemen, please help me welcome Anike Adelikan to the Business and Experts Forum.
Hi, good evening. Good evening. Thank you, Marcos, for that introduction. I'm really grateful for having me on the platform, and
Okay, good.
looking
Nikki.
forward to sharing my passion about insurance.
Okay, good. It's good to have you. And I know that
Thank
you
you.
are a wealth of knowledge, Nikki. So I'm just gonna, before I start, I'm just gonna just highlight a couple of statistics that I picked up whilst I was researching on life insurance, and it
Mhm.
actually says that according to a recent survey, over 25% or more than a quarter or more than 303 million UK households with mortgages don't have life insurance, and there are roughly 8 million do. Okay. Another survey from Aviva found that married couples who pay a mortgage are more likely to have life insurance. That is 70% of all married couples, married mortgage holders do, compared
Mhm.
to only 30% of those that never marry. So it's obvious that there is a need for us to protect ourselves. But then from the statistics, you can see that it's not everybody who does. So I want to start by asking you, because of the kind of the topic we are talking about, what do we mean when we say the unexpected? What could we possibly mean? What are some of the elements? What are some of the issues that can be classified as unexpected?
Thanks, Marcos. Well, I mean, the most apparent thing that one can classify as something that's unexpected is death, because we never know. Everybody's going to die one day. We never know when death is going to come calling. So death is the main thing I classify as something that is unexpected. A lot of people go to bed at night, they don't wake up the following morning, or just suddenly die out of illness. It could be a car, it could be an accident, any sort of accident. Death is around the corner. We never know when it will happen. So it's an unexpected event that needs to be protected. Another unexpected event would be critical illness. Um, People are being diagnosed with critical illnesses round the clock, and it's unexpected. Nobody plans to be diagnosed with cancer or heart attack or stroke, but people are being diagnosed with these critical illnesses on a daily basis. So that's another unexpected event that people are not thinking about or planning for, because we all think it's not going to happen to me, it's not going to happen to my family member. But then all of a sudden it happens and no one is prepared for it. And that's why it's to make sure that these things, unexpected events, are protected. Another thing would be income. Nobody plans on losing their job or losing their income or not being able to work or have an accident or fall ill, and their income suddenly stops because they're not getting anything from their employer. So loss of income is another unexpected event that people sometimes are not prepared for and don't plan towards. So those are just a few examples.
Do you think, Nikki, do you think that people are aware of these events that you have mentioned, that these are things that could possibly happen to anyone? Do you think that the populace, because if you look at the statistics that I described before you came in,
Yeah.
um, shows that very low percentage of take up of life insurance, and this is to do with people. Some people with mortgages are not even taking up that. So, do you think people are aware of some of these elements that you mentioned here, that they are unexpected, and do you think people are aware of them at all?
Well, I think it's a mixture. I think some people are aware and probably just think that they don't need. They're aware of the fact that they might die, they might have a critical illness, they might lose their income, so they are aware. That's just one side of the coin. That there are people that are aware, but don't really think that they need to do anything about it, and there are other people that I would say probably are not aware or not thinking about it, and so they're not thinking that there should be any reason for them to take the steps of putting life cover or protection in place. Or I think for me, I think knowledge is power. So when people are given the knowledge,
Mhm.
and we can have a discussion about it, it equips people with the tools to be able to help them make the right decisions about protection, especially in relation to mortgage or their health, their income, and things like that.
Okay, so I mean, obviously, you've mentioned the three elements that you think we think are events that could happen suddenly, and for which reason you obviously one will want to take a cover. So then I will go straight to the point about the life insurance cover itself. What is it? What is meant by life insurance cover?
Life insurance cover, in a nutshell, is just it's protection against the unexpected. So it's all about protecting the risk. It's about risk management. People put protection in place to mitigate the risk. So when, for example, I'll take the example of just as you said about mortgages and people taking up buying property. So a lot of people buy property, they want to become property owners, but they don't understand the fact that it's not just about taking out the property. It's also you need to go a step further about making sure that you have a life insurance policy in place to protect that mortgage. Because if the property owner dies within the course or the term of the mortgage, and there's no money in place to pay off that mortgage, what will then happen is the bank will come calling for the outstanding balance on the mortgage. And if the family haven't got that money, then what the bank will then do, the lender, will initiate legal proceedings to repossess the property.
Right.
So the important thing for property owners is if you're buying property, you're taking out a mortgage. Your mortgage could either be capital repayments, that means you're paying off the capital and the interest, or your mortgage could be interest only. Depending on what sort of mortgage you take out, it's always advisable to make sure that you have life insurance policy in place. And what we tend to recommend or advise is that you have the policy that goes hand in hand with your mortgage. So, as an example, if you have a capital repayment mortgage, we would advise that your life insurance policy is in place on a decreasing level. I say decreasing because if you have a capital repayment mortgage, you're paying off the capital and the interest, so your mortgage is slowly coming down. So
Okay.
alongside it, the life policy will do the same.
Okay. So, for the benefit of our audience, I would like when we talk about you make reference to any point where I think is a bit technical. I would ask you to kind of break it down so that we can get it, because we are learning. This is the whole idea of this forum, is to share knowledge. So,
Yeah,
you talked about capital
repayment.
capital payments. Okay, so when I take a mortgage,
Mm-hmm.
okay, and I'm paying, I know that my mortgage is what I call repayments. I'm using the repayment method to pay, okay, but I know that there are people who are only paying the interest on the amount that the mortgage company or the bank has loaned out to them
That's right.
until the very end of the mortgage, which is when they pay the principal, which is what it is. Okay, so when you talk about capital payments, you what I think you are just explain what you are referring to, the capital bit. I will call it something else, but tell our audience what you refer to as the capital element of the payment.
The capital element is the exact the actual amount of your mortgage.
So it's the principal,
Is the
the
principal
principal
sum.
amount.
The principal sum. But obviously, on top of it, there are interests that the bank have put on there. So that's why we call it capital repayment. I'm not a mortgage broker, but within the insurance field, we call it, I mean, even the banks call it capital repayments because you're paying off the principal sum and the interest on top at the same
Okay.
time, as opposed to a mortgage that is interest only, as you've alluded, that it will just be
Yes.
the principal sum will sit there, and at the end of the term of the mortgage, the property owner will then have to find that principal sum to pay off the mortgage. So what I'm saying is, if within either of those two examples, if the property holder dies within the term of the mortgage, either whether it's a capital repayment or it's interest only, there has to be something in place to be able to pay off what's outstanding on that mortgage. If there's nothing in place, then there's a possibility that the family will lose the family home. And that's why we advise that you put in place life insurance. We call it mortgage protection. It's there to protect your mortgage in the event of death or critical illness. At least the life insurance will then pay that off. So the life insurance is there to pay off the mortgage in the event of death or the event of the mortgage holder being diagnosed with a critical illness.
Okay, so when I'm buying, I'm taking out a mortgage. There are two types that I look at. I'm looking at the kind of mortgage which is residential. So I buy a house, I have a family, we live in
Mm-hmm.
a house, I work, or my wife and I work. We combine, we pay the mortgage off. But I could also buy a mortgage, which what it's referred to as buy to let.
Mm-hmm.
So if I am I'm going to through the buy to let kind of a pathway, okay, would I still be covered by the life insurance? Is there any difference between the kind of life insurance that I need to take if I buy a residential home as compared to if I'm buying to let?
Well, not really. The only difference with the buy to let is in most cases, the buy to let mortgages tend to be interest only
Right.
because it's for commercial purposes. The banks tend to put those in place because they know that at some point either the owner will sell up and move on and buy more property. So they tend to be interest only mortgages. So the sort of life insurance policy that we would recommend at that point would be a life insurance policy within the term of the mortgage, but interest only. So it would be on a level. We call it level sum, on a level sum,
Okay.
as opposed to a decreasing level, whereby I don't want to confuse people because I'm not obviously dealing with mortgages here.
Yeah.
But if it's capital, all I want people to understand is if you have a capital repayment mortgage, your life policy will be on what we call a decreasing term because it will
Right.
decrease alongside your mortgage. If you have an
Okay.
interest only mortgage, whether on your family home or your commercial property, it will be a level lump sum.
Right.
So
Okay.
that's all
So
people need to know to understand, what they need to put in
okay.
place alongside the mortgage.
Okay. So let me elaborate that for our audience, for those who are not very familiar with it. So if what you're saying is that if you took the repayment mortgage,
Hmm.
okay, every time you make a payment at the end of every month, the
Yes,
balance on your principal plus interest keeps going down.
that's
So
correct.
just to match that, you will have to take an insure life cover, which it also reduces as your mortgage amount reduces.
That's
What
correct.
that
Yeah.
means though, what that means though is that at the time that your mortgage finishes or is paid off,
Hmm.
your life cover amount will probably come to near close to nothing,
That's correct. Yeah.
because that's it. So you are not going to get in the event of death for something like that, you're not going to get a lump sum because your mortgage is paid off and
That's
your
correct.
life cover is totally related or correlated to your mortgage.
That's correct.
However,
Yeah. Hmm.
however, you could you still have a repayment mortgage, but still decide to take a level life insurance cover?
It's not advisable because what the best recommendation or the best advice would be to have two separate policies. So one specifically for your mortgage, and that pays off the mortgage in the event of death or critical
Yes.
illness. If you're now looking to leave a financial gift, or you want to create a financial legacy for your children, for your family,
Yes.
then we would advise or recommend that you have a separate policy to that, which you then
Right.
put in trust for your children or for your beneficiaries, and that will be a
Right.
separate lump sum, and that will then be paid out in the event of death, or it could be critical illness cover, either one of the two,
Okay.
and that will be separate from your mortgage.
Okay. Okay. So you could have
Does that
a
make sense?
cover for the mortgage, which will be
Mm-hmm.
reducing balance, as it were, and then you can
Yes.
have a different cover for all the other things. Now, when we talk about all the other things, I want us to elaborate a little bit on all the other things. It could be
Right.
critical illness, which you've mentioned.
Mm-hmm.
Now, one other thing that we can also talk about, you talked about, is loss of income as
Right.
well.
Mm-hmm.
And then there's one thing that sometimes we some of us ignore, especially when you've got children. You have to
Mm-hmm.
look at the children's education,
Right.
right? So can you we can include the children's education as part of the level kind of life insurance cover, right?
Yeah, see, with life insurance, so what we have is we have term life insurance, yeah,
Yes,
which is the life insurance policy that ends at a certain term, and then you
that's
can put
correct.
that in place to leave as a financial gift to the children, to the
Right.
family. That will cover the family's children's education. It will cover funeral expenses. But what I want people to understand is with term life insurance, it ends at a certain age. So
Yes.
probably retirement age, depending on people's circumstances, we look at the best time for the policy to end. If you've got children, maybe by the time they're grown up, you don't need to be paying your policy till the age of 90, only if you want to. So that's one
Hmm.
aspect. We have another sort of policy, which is what we call whole of life policy. That is also a policy that you can put in place that never expires. And for families that think, okay, I'm older now, but I've got younger children, and I'm wanting a policy that will pay out, an assurance that this policy will pay out to my family in the event of death, then we would advise a whole of life policy. In relation to
Oh,
income, we have what we call income protection. Is another form of life policy, so life insurance, but that occurs in the event of you working, either you're self-employed or you're a salary earner, and you become sick or you have an accident,
hmm,
and you don't get any sick benefits from your employer, or you get sick benefits but only up to a certain point. That's if you have income protection in place, it then kicks in. In relation to children, we have what we call family income benefits. It sounds like a benefit from the government, but it's also a form of life insurance. And we recommend them for people who have younger children. You might want to put that in place to the age of maybe when they're 25 or 30. And that covers the children in the event of the one of the parents passing on unexpectedly. That there'll be a lump sum and a monthly income that will come into the family that will take the children through their education, just keep them in the lifestyle that they're accustomed to when their parents were alive, basically, right up to university level. So those
okay.
are the different types of policies or products that we talk about, depending on
Okay. I'm gonna
circumstances.
I'm gonna ask you to list them one by one again. How many have you listed so far? I see three or
Right.
four.
Okay. Well, there's a bit more. So we talk about term life insurance.
Term life
Term,
insurance.
yeah,
Okay.
that's the
Yes,
policy, life insurance policy that ends at a certain term. And when I
that's
say
correct.
term, in relation to age,
Okay.
and the one
And
and the
that
age
and that and that can cover
age
what?
that will cover death. It kicks in the event of death.
Yes.
It could also kick in the event of critical illness.
Right.
But it ends at a certain term. We tend to go with retirement age, which within the financial industry say 68. So
Okay.
if you put that in place, if the policy holder dies within that term, so between now and the age of 68, before 68, then there'll be a
Mhm.
payout to the family.
That's correct. Okay.
What I need to let people understand is if the policy holder then survives the policy,
Yep.
then the policy lapses.
Yes. What
Yes.
happens then?
So I get a lot of questions from people that say, yeah, just like you said, what happens then? And people then say, do I get my money back? I paid all this money to insurance. What happens to
No.
my money? And we say no. Unfortunately, no. That's a joke. Well, the beauty of insurance, it's just like
Mm-hmm.
anybody insuring their boiler
Mm-hmm.
or your car.
Yeah.
At the end of the year, you don't go back to the insurance to say, well, I didn't have an accident. Can I have my money back? Or I haven't had a problem with my boiler. Can I have my money back? People don't seem to realize that it's the same applies to life insurance.
All right.
Yeah, you haven't died. You're still very much alive. You're well, but your policy, you've come to the end of your policy and you've outlived your policy. Unfortunately, you don't get your money back. But having
Okay.
said that,
Mm-hmm.
there are certain providers that have certain add-ons to the policy. So we know the policy, the providers, we know what their products are. So we have certain add-ons that we can put in there, like for example, conversion. We can call
Right.
it a conversion, whereby you come to maybe age 870, and you have the
Right.
option to convert to what we call a whole of life policy that will never expire.
Okay.
So depending on people's circumstances, we can advise that. In relation to critical illness, we have what we call a renewal option. So just
Okay.
before your policy expires on your critical illness cover, you have the option to renew, to extend the policy further, basically.
Okay.
So
Right.
those
Is there a
options are there.
limit? Sorry. Is there a limit on how long you can extend it for?
It differs with different providers. So every provider, because there's so much competition in the market, so different providers have different options and terms and conditions to attract clients. So it depends on the provider we go to. So every provider is different, and not
Okay.
all the providers have the conversion option or the renewal option. Only some of them. But because we're in the market, we know which is which, and we can advise the clients accordingly.
So what qualifies you for that conversion as a policyholder?
Nothing actually. I think I wouldn't say that anything qualifies. Anybody can have it. I think it all boils down to affordability. What
Okay.
we advise is with life insurance, it's all about your affordability and
Right.
sustainability. We wouldn't want you to take out a life insurance policy that's unaffordable for you, because
Mm-hmm.
what we wouldn't want is 6 months down the line you realize that you can no longer afford it. So when we're advising and making the recommendations and we're looking at the quotes, we're always very conscious of the affordability criteria.
Okay. So I know you've talked about affordability. I'm going to come to that affordability, but before we do that, as I said, listed three. You've mentioned one so far. What is
Okay,
the so what's the second one? Because
right.
what
So,
I want our audience to do is to be able to have the clear
mhm,
idea about the different types of policy that there are, and
okay,
then we also want them to understand what those policies can cover and what it
right,
cannot cover. And
okay.
obviously, there will be cost implications for the policies. Then we can come to the cost implications for those policies, what that means for the audience. So let's take them one by one. And then, so what's the second one? We can talk about that.
So the first one was term life insurance, yeah.
That's correct.
The
Yes.
second one is what we would call whole of life insurance.
Whole
And a
of
whole
life
of life,
insurance.
yeah, whole of life is a life insurance policy that assures you of a payout to your family. So it's a policy that never expires. And
Okay.
we tend to recommend it to families that want to make sure that their loved ones get something after they've passed on. So that's a whole of life. Even if you live to the age of 100, you're guaranteed a payout from that sort of
Right.
life insurance policy. It tends to be slightly more expensive than term insurance, but it's
Okay.
there. So that's number two. Number three is what we call critical illness cover. That's a form of life insurance that covers and protects your health in the
Hmm.
event of you having an accident or becoming ill, a sickness, and you cannot work. So with your critical illness policy, once that kicks into place, if you're diagnosed with a critical illness, then what that means is if the illness is covered under your policy, then there'll be a lump sum payment paid out to you so that you can use that to take care of your finances whilst you're trying to recuperate from your illness. At least you won't have any financial worries. Yeah.
Hmm.
The fourth one is income protection. Income protection, as I've explained, it relates to loss of income basically. So let's say you're working, you have an accident, either or you become sick and you can no longer work, and your employer does not pay you sick benefits. If you have an income protection policy, it kicks in to provide you with a monthly income to take care of your expenses on a monthly basis, basically. And
Okay.
that can be in place. It'll be in place to the age of retirement, but it's what it means is it's in place for either the benefit period will be in place for a year or 2 years, or for the whole of the policy right up to the age of 68, depending on what you can afford.
Okay.
Yeah.
So just to go back on the critical illness,
Hmm.
does it cover um all illnesses, or are there specific illnesses that it covers? And can you get a variation between what illnesses are covered when you move from one policy provider to another?
Yeah. Different providers cover um, people for different types of illnesses. There's a wide range of illnesses that clients are covered for. There's so many medical conditions I can't even pronounce most of the medical terms, to be honest with you. But they differ from provider to provider. But there's a wide coverage of illnesses for clients depending on the provider. But the main ones are cancer, stroke, heart attack. They tend to be standard with most of the providers, but then they obviously then cover you for a wide range of other illnesses as well. And it also depends on whether you're taking out a standard critical illness, or you take out what we call an upgraded critical illness. It's like with it's like, for example, it's just like if you're taking out car insurance. With car insurance, you wouldn't go for just third party cover. You go for
Comprehensive.
comprehensive.
Yes.
So it's the same thing
Yeah.
with your critical illness. You wouldn't go. Some people go for standard, but we tend to advise you go for the comprehensive cover because it covers
Okay.
you for more conditions as opposed to just the
And
standard.
obviously the premium is higher.
Yes, it might be slightly. It will be slightly higher depending on. What I'd like to also say is premiums are influenced by people's age, medical conditions, and your BMI. So you might have a critical illness cover. You're going for the comprehensive package, and we look at the quotes, but that will then be influenced by the fact that you might be an older person as opposed to a younger person. That will influence the premiums. If you have medical conditions, existing medical conditions, that might influence the overall premium as well. And your BMI will so height, weight, dress size, trouser, waist size for trousers also influences the premiums, as well as if you're a smoker, if you're an alcoholic, or you're somebody who drinks a lot of alcohol, and also if you're somebody who uses drugs. So all those factors tend to influence premiums overall.
Okay. So when you talk about BMI, that is body mass, is
Index.
it index? Body
Yeah.
mass index. Okay, that's good. So it's interesting that we you saying all of this because oh, just before I go on, there is a question in the chat. It says that if you have term insurance, can you change it to a whole of life
Whole of life.
insurance?
My answer to that is yes and no. And the reason why I say yes and no is because it depends on the provider. As I've explained, some providers you can do that with. You can change. You can go from a term policy to a whole of life if you have the option to convert on your policy. And we apply it at the beginning of the application. It will be down to the provider to then decide whether they accept your policy,
Hmm.
sorry, accept your application with that included on your policy, with the option to convert. So, in those circumstances, I'll say yes. You can go from a term policy to a whole of life.
Right,
But what I need to emphasize on is the fact that at the point of conversion, your premium will then be recalculated based on your age,
right.
and obviously then the premium will go up.
Okay,
So we always need to emphasize that to the client that yes, you might end up with a whole of life policy at that point in time. The provider might not ask you any more questions about lifestyle or your medical, but they will recalculate your current premium based on your age. So what that means is at the point of conversion, you might want to go for a whole of life, but it then might not be affordable for you any longer at that point in time.
okay.
That's the
Okay,
one hand. On the second hand, some providers you can't go from life term to whole of life.
I
It's either
see.
one or the other.
Okay, okay. So, I mean, from what you are saying, it's obvious that it's useful to take life insurance cover because obviously covers you for a wide range of things.
That's
Why do
correct.
you think people are skeptical about life insurance cover?
I think it's lack of knowledge about the importance of why they should have it. I think it's lack of knowledge of the impacts that it would have on the family if they didn't have it. And I think some people just can't be bothered. They don't want to listen to it. They think as soon as you talk to people about insurance, they feel you're jinxing them. They feel, oh, they
They're
might
going to
die
die soon.
tomorrow.
Hmm.
Exactly. And some people just don't want to talk about it because they just think you're going to jinx them. But I think knowledge is power. As 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 soon as long as we can, pass on the knowledge, impart knowledge to people, share the knowledge about the importance of having it and the impact of not having it on their family, especially families with children. I've come across a lot of families who have young children with no life insurance in place. And I asked them the question that if you die tomorrow, who's going to look after your 4 year old? And it gets them thinking about, okay, I didn't think about that. And I say to them, you don't want to be a statistic. You don't want your family have to go onto social media, raise GoFundMe, to try and bury you or to look after your children. So I think it's all about, having the right knowledge to be able to make the informed decision.
And I want to emphasize this is what this program is about. This program is about sharing knowledge with people, just for people to get that awareness of some of the things that are out there, things that maybe people don't get a chance to have a read on, or things that people don't normally get a chance to hear. That's why we bring people like you onto this program to come and talk to us about some of these critical things, and then to share useful knowledge that people can take away. That's why I always recommend that people bring family members in to listen to these programs, because it's, first of all, it's free, and secondly, it's really really beneficial. So if you've just
Yeah.
joined us, we've been talking to Anike Adelekan, who is a protection specialist. Is that what we call it?
Specialist protection advisor.
Specialist
Specialist
protection
protection
advisor.
advisor.
Yes, specialist protection advisor. She's talking to us about the relevance and importance of taking a life insurance cover. And so if you just join, I just that's where we are. We're still talking about it. And if you have family members who you think will benefit from this discussion, I would advise that you send them a link and get them to join in as well. So, Nikki, one thing uh, that is relevant and which is associated with insurance, obviously, is the premium that we pay.
Mm-hmm.
Okay. Now, insurance could be taken by anyone.
True.
You could either take insurance um, as an old person, and you can take insurance as a younger person.
Mm-hmm.
Now, you've have mentioned that when it comes to insurance, obviously, when it comes to, especially with the convention and things like that, they will consider things like your age, how many more years you've got to live, and
Mm-hmm.
obviously, when you're older, you are more prone to illnesses like
True.
heart disease and some of those critical illnesses that you did mention.
Mm-hmm.
So, is it wise, obviously, or what would you recommend for those of us who have got younger children? Okay, apart from taking life insurance for yourself, which will cover the family when you are not there, what would you suggest about the children? What can we do when it comes to life insurance cover for the children, with the children as well? Can we do something with them as well?
Yeah, there are a few things that we can do in relation to children, and I'll use my children as an example. So when I had a better understanding of life insurance, and because I don't know about you, I'm in my 50s, and I think for a lot of people in their 50s, we weren't taught about life insurance from our parents. So a lot of us have come into the knowledge about life insurance at a later age. And
Yes.
so to avoid that same sort of thing happening to our children, I found that a lot of families are now encouraging their children to take out life insurance. And it's important that you do take out life insurance from an early age because you find out,
Mm,
one, you're young, you've got no medical conditions to take on board, and the premiums are relatively cheaper once you
yes.
take it out earlier. And the premiums stay guaranteed; they don't change during the course of the policy. So it's always advisable to start life insurance early. So, in relation to our children, my advice would be yes, if you have children who are young adults, encourage them to take out life insurance. What I did with my older children is because they couldn't get it, they didn't understand it, and just thought mom's going on about something that they're not really bothered about at this stage. I put it in place for them and I started paying for it for them.
Yeah.
And just continue to talk them through the process until when I thought, okay, now they're at a point where they're working, they can pay for it themselves, and they were ready to take that on board. So that's another way of getting them into the system and getting
Right.
these policies in place for them, especially critical illness cover for their health. I think that's
Yeah.
very, very important. With the younger
Okay.
children, you can add them to the policies with your critical illness cover. Your younger children are covered automatically under your critical illness cover if they're
Okay.
below the age of 18.
Okay. So there's a question in the chat, but before I bring that question in, I just want to ask you. So, what's the distinction between critical illness cover and health insurance?
Oh, wow. And you mean, when you say health insurance, you mean private medical
So, if I
insurance?
take private medical insurance, yes, what's the difference between the private medical insurance I take and the critical illness cover?
The main difference is with the private medical insurance, you're not getting any sort of lump sum or cash payments.
Okay.
What with your private medical insurance, what you're doing is you're being covered privately. You're skipping the list. You don't have to be subject to any NHS lists, waiting lists for any ailments or conditions that you might have. You have immediate access to consultants to discuss your conditions with, and prompt access to medication, and even prompt access to some drugs that are not on the market
Right.
under the NHS. The difference with critical illness cover is, with critical illness cover, if you're diagnosed with a critical illness that is under your policy, then you'll be paid a lump sum payments, cash payments, tax free. So that's the main difference between the two.
Okay.
And you can then use some of that money to go to get private medical care if you wanted to. So that's the main difference between both, just to make it simple.
So, if you have to know how much it will cost you to get private medical treatment in that case, because obviously what you want to do is that you want the lump sum payment that you receive from the critical illness cover to be able to pay for your private medical costs or your expenses if that kind of happens, isn't it?
Well, with your private medical care, because you're paying a premium, so there won't be any cost for your treatment once if you need it, because you're already paying your premiums towards the private care that you would need in the future if it ever
Okay.
arose.
Okay.
So that's the
But
but sorry, go on.
what I meant was that if you don't take the private medical insurance and you're taking the critical life insurance
Yeah.
cover, you got to be sure that should the inevitable happens that you get some illness, if you're going to go take that lump sum and go to a private medical treatment,
Yeah.
then the lump sum that you receive should be more than enough to cover the private medical treatment costs.
Without a doubt. Exactly.
So
Yeah.
should you consider that at the time of taking that critical illness cover? At that point of taking that cover, should you be looking at things like that? You should have an idea of how much it costs to pay for private medical cover, shouldn't you?
Well, I guess I would say yes and no, because some people might not want to. They might think I'll stick with the NHS. That even though it's the NHS, they might think they'll still get adequate medical attention and care. So it varies from person to person. Some people might think yes, I might want to get private medical, and then want to consider that when they're talking about their life insurance policies. So no two people's circumstances are the same. So it depends on the individuals, I would say.
Okay, so we've got two questions in the chat. The first one is that could you please clarify the distinction between the term insurance and whole of life insurance? Somebody wants a bit more clarification. I think that just to get just from a lay person's point of view, what are they? So I can clearly understand it as a lay person.
Yeah, the simple difference between the two is that one expires, the other doesn't. So term life insurance expires at a certain age.
Okay.
That could be retirement age 68, maximum age 90.
Okay.
Whole of
Okay.
life never expires.
Okay.
That's the best way to put it for people to understand.
What about the premiums that I pay for them?
They'll be
Do
different. Yeah,
okay.
they'll be different because
Which one will be higher?
the whole of life, because
Okay.
it's a higher risk.
Yes.
The insurance providers are covering you for the whole of your life.
Exactly.
So the premiums tend to come up slightly higher than standard term insurance.
Yeah, I think I wanted to make that very clear, because apart from just the duration of the cover, you also got to bear in mind the cost, because insurance is all about money, isn't it? So you're paying the
It is.
premiums, and like you rightly said, if it elapses and you get nothing back, so you want to be clear what you're going to be getting yourself committed to before
Yes.
you get into it. That's it. So very important.
Yeah.
The next question is that, where does funeral plan come into this whole scenario?
Good question. Funeral plans, from my experience, I tend to have a lot of clients who want funeral plans because they can't get standard life insurance. And the reason why they can't get standard life insurance is because they've got medical conditions. Because with the funeral plans, you're guaranteed acceptance because they don't look at any form of medical conditions or your medical history. So what you tend to find is the older clientele who have medical history, medical conditions. They want to put something in place for their families to assist their families with the cost of a funeral at the time that is required. They want to lock in the price of the funeral plan at today's prices, because the beauty of funeral plan is you lock in today's prices. So if you get your funeral plan, as an example, for £5,000 today, but then you go on and live for another 10 to 20 years, and at the time you pass on, the cost of a funeral is £30,000. Because you've bought your funeral plan, you've put it in place, you've paid for it, finished paying for it, the insurance company will honor that funeral plan,
The lump
even
sum
at the
of five
cost
thousand.
of, yes, because that's what you paid, even though they will have to probably pay out £30,000 worth of funeral cover at the
Sorry,
time
say
that
that
the
again.
family
So
needed. What
how
I'm
much
saying
does the
is
insurance company pay?
they will have an agreement with the funeral directors. But
Right?
what I'm saying is, if you take out your funeral plan today for £5,000,
Yes.
but when you die, the cost of funeral, cost of funerals generally has probably risen to about 20 to 30,000 pounds.
Yes.
Your family doesn't have to worry about that because you have a funeral package in place. You've locked in the
Yeah.
price at the time for 5,000.
Right.
The insurance company has to honor that funeral plan regardless of how much funeral costs at that point in time.
Oh, really?
Yes.
Okay, I didn't know that. So if the funeral cost at the time you pass on is 40,000, the insurance company will have to honor that 40,000.
Well, thereabouts. Because what we're looking is you've got your funeral plan, you've locked in the price, so your family are not concerned about how much the cost of funeral at that point in time. As far as they're concerned, and the insurance providers are concerned, is you have a funeral package in place. You've paid for it. They have to honor it, and that's the beauty of a funeral plan.
Even though you logged it into it at 5,000, you
Yeah,
can
yeah.
still rest assured that it will be paid at this and
You
okay.
when you need it, yes, when the family need it, and that's the beauty of it. And like I said, a lot of older clients tend to lean towards funeral plans if they have medical conditions and
Mm.
they can't get standard life insurance, although they might want to leave a lump sum to their families, but they can't do it because they can't get standard life insurance because of their medical history. So the next best option we advise is a funeral plan.
Okay. So that's good. So if I want to take a life insurance cover, okay, because based on the discussion we've had, I just think, gosh, I really need a life insurance cover. What's the process like? What do I need to do?
Well, you'll either come to me as a referral, or I would have probably met you at an event or in church or something. But anyway, so we have a discussion. I get your number. We set up a consultation. Consultations could either be over the phone or face to face or via Zoom, whichever your preference is. And our procedure is because we're FCA regulated, we have a lay down procedure. So basically, we introduce ourselves formally. We give you certain documentation. So my business card will be handed to you, or I'll email it to you alongside what we call the key facts of our services. That's one of our documents that we email to you. The key facts of our services just gives you an outline of who we are as an organization, what we do. We advise, we make recommendation. It also tells you about the providers we work with. It tells you about our complaints procedure. It tells you about our compensation scheme and things like that.
Okay.
Within that
Okay.
document, we talk about verifying your ID. We talk about data protection. We talk
Mm.
about your rights to counsel. And the third document, which is, the fourth document, which is very important, is what we call just documents on disclosure. And it emphasizes on the importance of giving full and frank disclosure about your medical history.
Okay.
Because,
Okay.
yeah,
Yeah, I was just going to say because of time. If
right?
you need to contact Nikki, just send us email to business and experts forum at gmail.com, business and experts forum at gmail.com, and then we would link you up with Nikki if you want to look at it. But basically, what I was trying to drive at that is that once if you get to the point where think you need a life insurance cover, you need to contact a broker. Basically, you need to get somebody who's been trained to provide a financial education on
True.
that kind of cover so that they can then take you through. That's what I'm trying to drive at. What are some of the limitations to people taking up life insurance cover?
Limitations, I think I don't really think there are any limitations. Everybody's circumstances are different. I think it's just all about, it's down to affordability. I
Okay.
think money is the main, I would say for a lot of people, it limits, that's the main limitation for them. They think, oh, I can't afford this. I've got so many bills. I can't afford life insurance.
Hmm.
And so when we take them through the process, we look at their income and their expenditure. We try and establish their disposable income. And based on what their disposable income is, give us a very good idea of how much they can afford realistically for any sort of life insurance cover they want to put in place.
Okay. So it's mainly financial, but we also mentioned something about lack of knowledge, isn't it? So when people are not knowledgeable on something, sometimes they are a bit
Mm,
skeptical about into it. Okay.
yeah.
Um, okay. So there is a question in the chat. How can one how can one get started as a
Started.
specialist protection advisor? I think that's I would suggest that because of time, you Olusoji way. If you send me an email to Business and Express Forum at gmail.com, and then we can link you up, and then you can then go through the process of becoming a specialist protection advisor, because that's what you're looking at. Because this program is mainly to talk about the product and not necessarily talk about the role per se. It's just the product we want to talk about in this program. So I know we talked about affordability.
Mm-hmm.
Okay. Now this is the case where you talked about um, different elements of the cover. You've got the mortgage, you've got the critical illness, you've got the
Protection.
protection.
Income protection.
You've got the whole of life protection. Okay.
Mm-hmm.
Now, what in terms of affordability, each one of these policies would attract a different premium, isn't it? So
Most definitely.
yeah. So how do I combine them? How do I combine them? Make sure that I can reduce the amount of premium that I pay, because affordability is an issue.
Mm-hmm.
Obviously, people want to know how they can kind of pursue the line of least resistance, as the line of the least cost, as it were, to enable them put something in place to cover themselves and their family.
Well, what we say is something small is better than nothing at all. So, and we would have to look at which is, we look at a list of priorities of which is most high on the list as opposed to, what's low on the list. So, for example, if you have a mortgage and you just bought a property, you have a mortgage, I would say that is quite important, high on the list, that needs to be covered. And then if we're going to then combine them with other policies, we'll try and bring it into your affordability. So if you were to take a separate life insurance policy you wanted to leave as a gift for your children or your
Mhm.
family, then we'd look at a reduced amount of cover to make sure that the overall premium you're paying on your mortgage protection, on your life policy term, or your income protection, your critical illness, you want it as a combined package, then we'd have to look at the amount of cover we're putting on each of those policies to make sure that the overall premium is still affordable for you.
Okay, okay.
Yeah.
That's very interesting. Thank you very much. If you've been listening to us, we've been talking to Anike Adelikan, who is a specialist protection what's the word again?
Advisor.
Advisor. It's the advisor that always escapes me. That's the one that escapes me all the time. Specialist protection advisor. And we've been talking about life insurance cover and the relevance of life insurance cover. And I mean, the statistics. I'll read out that statistics again for people who join us late. They, according to a recent survey, and especially for those who live in the UK, it's over a quarter of people, over 25%, or more than 3 million people in the UK households with mortgages don't have life insurance. That is a lot of people.
Hmm.
A lot of people who don't have life insurance. And also another survey by Aviva found that married couples who pay a mortgage are more likely to have life insurance. That is 70% of all married mortgage holders do. They do take an insurance compared to only 30% of those that are never married. It does
Married.
not mean that those in the 30% bracket will not face the unexpected issues. It doesn't mean that they will not face critical illness. It does not mean that those in the 30% bracket will not encounter issues to deal with income, loss of income, or income stuff like that. So it's very important that everyone who is listening pays attention to this, and you try and get yourself covered for yourself and for your family, just in case you are not here. Okay,
Most
so
definitely.
I think we've come to the end of the discussion. Before we go, we have something we try to put our resource persons and in an uncomfortable position as a way of just having a bit of fun on the program. We try to look around, see what we can do to get Nikki in an uncomfortable position, and she's told me that she's a solicitor. So she told me that she's a solicitor, so I have to be careful what I ask her to do. So we're gonna be making it very simple, Nikki. We understand that you are a very good singer,
A
so
singer.
we're gonna yeah. So we're gonna
Oh,
we're gonna ask you to sing a nursery rhyme.
okay. Do you have anyone
So
in
we
particular?
no, we are taking you back 52 years or 51 years to when you were in the nursery or reception or whenever.
Okay.
So it's a nursery rhyme, a nursery song of your choice. You're gonna sing it for us, and let's see how good you are at that.
Um. Wow. Nothing comes to mind. Let me see. Okay. Twinkle, twinkle, little star, how I wonder what you are. Up above the world so high, like a diamond in the sky. Twinkle, twinkle, little star, how I wonder what you are.
You see, you are truly a
Do I get a
solicitor
round of
because
applause?
you took. Yeah, you get a round of applause, please. Yes, this is it. This is from me. I think that you are a true solicitor because you took the line of least resistance. Somebody in the chat has said you should sing Baba Black Sheep, but sorry, she's done already. So at the next time she will sing Baba Black Sheep. So right. So thank you very much, Nikki. It's been a
You're very
wonderful session.
welcome.
Somebody's putting there. It's been a wonderful session. It's brief,
Thank you.
but it's very essential, and I like the fact that you have highlighted some of the key things that we need to do just to protect ourselves. We need to take, especially if you have a mortgage, it's important that as an individual or as a couple or as a family you have that cover, especially if you are when you're getting older, because and you have got younger children, because these
Yeah.
are things that are likely to happen. This is when you're older, chances are chances are that you're getting closer and closer to when you God will call you, and then you will have to leave something for your family just to take the pressure off your children, especially. So we also learned from that you can take a cover for your children, and this is what a lot of people are not thinking about now, because a lot of us we don't have didn't get that education early enough. We took the cover the policy much later in life. You
Mm-hmm.
can avoid that situation by taking a cover for your children and teaching them to take a cover when they're younger. And then one advantage of doing that is that the premium they will pay will probably be about what or 80% less than what you are paying now, because
True.
they are so young. And if
Yeah.
they take a cover that takes for maybe about 50 years or whatever years, you can imagine if they're paying £10 or £5 a month, it's going to be absolutely nothing in the next 5 years. £5 is going to be absolutely nothing. So it's a
Mm-hmm.
real good thing to get them to learn about taking a cover for themselves, especially when they're becoming adults, young adults, and they've started work, or you can do it for them. And when they grow up, then they can take over. Thank you very
Yeah.
much, Nikki, for coming on the program. It's been a real eye opener. I believe that we'll probably want to bring you back at some point to talk a little bit more about some of the, just to delve a bit more into each of those elements we talked about. You talked about four bits, four of them. The term one, you talk about a whole of life, you talk
Right.
about critical insurance, you talk about income protection. We'll probably want
Mm-hmm.
to bring you back to talk a little bit more about it. We'll take one particular one and talk a little bit more, delve a little bit more about into those ones, just to be sure that we get a very good understanding of
Yeah.
that. And as I say every time, for you out there who are in the audience, we want to say very good, big thank you to you for joining us on this program. Business and Expert Forum is designed for people like you, just to make sure that we share knowledge with people. We bring in key people, we bring in specialists to come and talk about specialist topical issues, so that we can learn and take away. We can learn something and take away. Bring your family in. Please make sure that you subscribe to the channel and you click on the bell, so that when there is a new episode, you can get notification for it. Please get your family to subscribe to the channel as well. So until next time we come your way, we are back on the 21st of March. That's the next episode. It's another wonderful episode on the 21st of March. Join us at that time. Until then, this is Marcus saying thanks for watching and bye for now.